Pension Board. Yeah, continue. And call the meeting to order and approval of the minutes from September 14th.
Let's see. Let me look at the right ones here. Hold on.
I had one little change, which is kind of silly, but it's in performance review. It says Mr. Nash said that the contract with Callan would be expiring 2023. After contacting purchasing, it was decided that the pension board should too go to out to bid. So just the two shouldn't be there, but that's just, you know.
Yeah, minor. Also a couple of typos in the paragraph before the performance review.
Right. Anyways, without that, is there a motion to accept the minutes?
I will make a motion to accept the minutes.
And seconded, all in favor? Aye, opposed? Nope. Is there any public comment? If not, we're going to move on to approval of the pension applications. Jerry, you with us?
Yes, I am, Frank. Frank, are there enough members for a vote tonight?
Yes, because there's three of us and there's only four on the board right now. So it is a majority of those on the board.
Very good, then I will proceed. We have 3 applications for this evening. The first one is Milton Gideons with maintainer 3 with the Department of Public Works. He is electing an early retirement. He has elected option 3. His monthly pension benefit is $3,831.17, annualized to $45,974.09. The second one is Sharon O'Hara, a paraeducator with the Board of Education. She is receiving a regular pension. She elected the standard form of payment. Her monthly benefit is $640.70, annualized to $7,688.40. And the last one is Godfrey Cowan, a custodian with the Board of Education. He is also eligible for a regular retirement. He elected option 3. His monthly benefit will be $1,033.37, annualized to $12,400.44.
Are there any questions on the 3 pensions?
Yeah, on the first one, Gideon, he elected option 3, so the beneficiaries are important. The contingent beneficiary, he named 2, but didn't put down a percentage.
Right.
I'm assuming he intended it to be 50-50, but he didn't say.
I can get him to clarify that, and I will just pass that along via email to the board once I have a chance to confirm that information. I suspect you are right, but we'll get clarification on that just for propriety's sake.
Should we just table that one until we get that clarification?
Probably would be better.
Yeah, I'm not sure why we couldn't approve it, subject to HR getting that clarified.
Yeah.
I mean, if it's 90-10 or 50-50, you know,
It's not going to impact.
doesn't impact our decision.
That's true. The one thing, Jerry, that I mentioned to you, that on the Cowan, there is a place where somebody put in their full social security number. I don't know if you noticed that. And just to make sure that if anything goes out into publication, you did, I think you correctly did it because you put in X's for the, you know, for the beginning of the social security number, and then somebody wrote it above it.
Right. Well, we make sure, I don't believe the applications themselves are posted for public viewing because of the proprietary information, but we'll make sure that that information is erased or at least obscured, again, just to play it safe.
Excellent, thank you. Is there a motion to
Sure.
accept the 3 pensions?
Well, I move to approve the 3 subject to clarification of the percentages on Mr. Gideons.
Excellent. Is there a second?
Second.
All in favor? Aye.
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 Opposed? No. Passes unanimous. Excellent. Thank you very much, Jerry.
You're welcome, and I will get with Milton Gideons and get that information verified, and I will email all the members of the board as soon as he has responded.
Thank you very much.
Of course.
The next is going to be the International Equity Manager Search. And this is something that we are going to be discussing with 3 firms. Now, because of the fact that we are remote and that someone could be listening in, and also I believe that this could be posted. My understanding is sometimes it gets posted on YouTube. I believe that we should go into executive session because although I'm sure everybody is honest and fair and everything else, but someone could possibly listen into someone else's presentation without our knowledge and or see it on YouTube. So that could give someone a advantage. So I would propose that we go into executive session for these 3 presentations. I mean, this is a situation where, you know, when we met in person, this wouldn't be a problem, right? But I don't want to have any possibility of any improprieties, and having been involved with Wall Street for a long time, on occasion I've seen improprieties. So we'll, unless there's a strong objection, we'll go into executive session now.
I move we go into executive session for all 3 presentations.
Excellent. You agree?
This is Anthony from IT. From a technical standpoint, as far as executive sessions over Zoom, normally the way we do it is we set up a separate meeting that you guys go into. But since we weren't alerted of that, so I would need to take a look at the back end to see if we have an account that I can create that meeting for you guys.
I mean, we have gone into executive session in the past in a Zoom call. However, if that's the case, why don't we then move on to performance review? Well, you can check to see how we go into executive session. Is that right?
Yes, that's fine.
Okay.
Yeah, Brett,
Okay,
can you notify the presenters that we might be a while?
Yeah, they know that to not join until I notify them.
Okay.
So that shouldn't be a problem. I guess one of the alternatives would be for the city to drop off the call while we have the discussion. But I'm not sure how that all works with Norwalk and the IT. So I will run through performance. Bear with me here. Does everyone have a copy of the flash report?
We
Yes.
do.
Great. So as you all know, global volatility across fixed income and equity markets continues to be very high. I think in August, the Federal Reserve Chairman Jerome Powell emphasized his commitment to, aggressively fighting inflation, which really tempered market expectations towards the end of the month. And we've really seen a risk off and down equity markets, both in the US and international. Since those comments, if you recall, July was a surprisingly good month, and August was not. So US equity markets, the broad Russell 3000 down just under 4%. Year to date through August, down about 17%. Growth continues to underperform value. Both are negative on an absolute basis, but we have seen value outperform growth throughout 2022. Small cap did do better than large cap for the month, but still trails year to date. In international markets, as you know, the Russia-Ukraine war continues to cause concerns with energy markets in Europe, especially going into the winter. And in China, we did see, shockingly, they eased their monetary policy, which actually led to a pretty good month for China. But broadly, International markets were down, and a very strong US dollar tended to hurt US investors in international markets. So with that context, we'll just turn to page 3 of the PDF, the flash report. Total assets in the pension about 470.1 million. Continues to be an underweight to total equity. You can see most of that within US equity, about 33.2% allocation versus a 35% target, and international equity about 19.7 versus 23%. Overweights consistent with past months and quarters. You can see slight overweight to global equity long short, slight overweight to private equity, and a slight overweight to absolute return and real assets. Given what we've seen in traditional public fixed income and public equities, having overweights to those diversifiers has helped the portfolio, UBS in particular, as well as PIMCO. So that you will see that come through in the performance. On page 4, we show returns, fiscal year to date, which is just July and August. US equity up about 6.2%, mainly driven from that strong month of July that I noted earlier. And you can see your active management, active managers, LSV and Columbus Circle, continue to perform very well versus their benchmarks. LSV up about 80 basis points and Columbus Circle up over 2% fiscal year to date. And longer term, I think I would note, we monitored LSV for a long time and their struggles in the growth market. They're up almost 10% over the trailing year. They're now well above the benchmark over the 3-year and much more in line with it over the 5 and 7 years. So it's good to see them bounce back given the market environment that we're now in. Within international markets, Artisan underperformed the growth index. You can see Silchester, while they underperformed for the month, they're slightly ahead over the trailing year and continue to have a strong track record over the longer time periods. BlackRock Emerging Markets has struggled a little bit. A lot of that prior underperformance is due to some allocations in China. We'll continue to monitor them, but no concerns from a platform or strategy point of view. Within global equity long short, you can see ABS and Blackstone have produced positive returns fiscal year to date. They did trail the strategic fund-to-fund benchmark. And you can see over the longer periods, ABS performance has been much more in line with expectations. And finally, on page 5, just diving into domestic fixed income. Better month for TCW, the MetWest Fund. We did transition from the mutual fund to the CIT for the lower fee during the month. So that also helped performance. And you can see overall the domestic fixed income portfolio has slightly outperformed the aggregate index. UBS slightly trailed for the trailing 2 months, but has had really strong performance over the trailing year. I did want to bring to the board's attention that the CIO of the absolute return strategy, Bruce Amical, is retiring. He's set to step down in March of 2023. This wasn't unexpected, but he was really a driver of the team and strategy. They did promote a deputy CIO, Eduardo Rulli, last year, and Bruce is expected to stay on through 2023. So overall, don't have any imminent concerns, but we do want to bring UBS in before Bruce leaves, preferably to make sure the board is comfortable with the dynamics going on there. And then finally, PIMCO has had a good couple months. And while you can see they have trailed the TIPS index, this portfolio contains a significant amount of diversifiers under the hood, and long-term, the performance continues to be good, and it continues to be an inflation hedge in that real assets bucket for the total portfolio. So the total fund for the first 2 months of the fiscal year up about 1.9%. That does not include private equity marks, given the lag in valuation, so it slightly trails. Longer-term performance has been consistent, up over 6% over the trailing 3 and 7-year periods. So I'll pause there, see if there are any questions on performance.
Anybody have any questions? Excellent. Thank you, Britt.
Great.
Have we learned anything in regards to going into executive session?
Yes, so I am in the midst of creating a Zoom meeting right now that'll be private. So I'm just building the invite list so I can send you guys the link. So normally the way it works is I will leave the public session open. You guys will leave, join the private meeting, and then once you're done, come back to this particular link to close the meeting. So give me about 2 more minutes so I could build the invite list. And then the link should be dropping in your inboxes in about 2 minutes.
Thank you.
I think we just need to make sure, Frank, that all the invitees receive the new link as well.
Right. Do you, is there anything
Hey,
you want to?
Britt,
Yes.
if I forward it to like the known participants, can you forward it to anyone who's not listed?
Yes, I'm
All
happy
right,
to.
perfect. I'll do that right now.
Great.
You know, one of the reasons why I considered this is I've done some things with the city where and when the city has decided who they would go with, no one can change somebody who lost out can't change their proposals. However, sometimes for us, you know, when we go in, we have in the past on occasion negotiated, say, a lowering of fees, or someone might understand that, you know, they could listen in and say, well, so-and-so wants whatever number of basis points, and as a result, we'll come in lower than that, or we'll lower ours to get back into the line with what others have. And so this is unusual, but, you know, but to have the presentation of 3 different firms that we're going to decide upon, I thought would be best to do.
I think it's totally appropriate.
Thank you.
Agreed. And I did receive it. It looks like Charlie and I were the only ones on the email, Anthony. I just wanted to make sure everyone else is going to receive it as well.
I'm still building the list. So I don't know if it's easier if I do that on my side, or if you just forward it to whoever you know needs it.
Yeah, why don't I forward it to the board now?
Okay, that would be awesome. Thank you. And then,
Sure.
so as I mentioned, so the way that it works, you guys will leave this meeting. I will stay here. Once you join the private link, I will make one of you host and leave. And then I will just wait for you until you come back to this public hearing and close it up.
And so we'll close out. Well, we also have a second meeting after this one. Okay, so we'll have to come back to this website or to this Zoom meeting, but we'll close it down. If I understand this correctly, we're going to close down this Zoom meeting, go to the new Zoom meeting. When we finish the new Zoom meeting, we will then open back up onto this platform. Is that correct?
That is correct.
Thank you.
Okay, so we all should leave this meeting. I've got the new link here. So we all leave this meeting now?
Yes, I think so.
See if I got the new one.
Okay, I'm going to join the other meeting.
I have not gotten it yet.
Oh, you haven't, Frank?
Maybe.
Yeah, you're on there. You're on the distribution, Frank. I see you there.
Okay, all right. Well, I'm gonna leave this meeting, and if I don't have it, sometimes my other computer's slow, so. Okay, so I'll hopefully see you on the other side as a new meeting, okay? Thank you. Bye.
Anthony, will you pause this meeting while the
Correct.
executive
I'm gonna,
session?
yes, I'm gonna pause the recording, but it will stay open.
Okay, sounds good. Thanks.
We're excellent. Now that they're recording in progress, I want to thank the executive session obviously is over. We met with the equity managers and we had a performance review. And is there any other questions? Or if not, we could have a motion for adjournment and then move on to the next meeting. And Charlie's still muted, or else he could motion for adjournment.
Okay. Again, move to adjourn.
Okay, is there a second? Right? I thought I heard Jim, even though he's muted. All in favor? Aye.
Aye.
Opposed? No. Motion passes. Meetings ended. Thank you very much. Next. Okay. Next, I would like to call to order the Defined Contribution Committee meeting and approval of the minutes from the last meeting. I didn't see any changes. This was from a meeting back in April. And if not, if there's no request for changes, move to accept the minutes as
Okay,
stated.
I'll move to accept them.
Second, all in favor? Aye. Jim, you're still muted. Okay. Brett, you want to go over the administrative investment management fee review?
Happy to, Frank, and we'll keep it quick given the time, but we do believe it's best practice to review both the administrative fees, which would be the record keeper fees, as well as the investment option fees for the DC plans every 3 years. So as you know, we conducted the record keeper search almost exactly 3 years ago, and it's been fully in place certainly for a few years. So we're basically doing a review of what participants are paying both at an administrative level and an investment level, making sure that they're reasonable. And if there are any cheaper options available, identifying those so the board knows that there are potentially cheaper options and can convert to those as necessary. So I'm joined by Patrick Wisdom, who's a defined contribution specialist. So he spends all of his time working with our DC clients on projects like fee analysis and investment structure evaluations. And Patrick's just going to review both the administrative and investment manager fees. And Patrick, if you can hit the high points, we would really appreciate it.
Sounds great. Thank you, Britt. Does everyone have the deck, or does it work best if I try to, looks like Britt's sharing it now and read my mind, but thank you for that intro and nice to speak with you all this evening. So I'll try to keep it high level. As Britt mentioned, we did a routine check on the defined contribution plans, administrative and investment fees. I think the primary takeaway is that on both the administrative side and the investment side, the current fees look to be pretty competitive. For the administrative fees, what we did in order to benchmark the current fee of $84 per head was we took a look at client plans, client DC plans that are of similar size in terms of both assets and participant counts. And we took a look at what they pay, both in terms of their quoted fee as well as transaction fees. And we'll get into some of those details in a slide or two, but just wanted to give an overview of the comparator group. And then on the investment side, our process was to benchmark each individual fund fee against a relevant peer group. And as a second step, we also reached out to each of the managers just to ensure that your plans are invested in the lowest cost share class or vehicle for which you're eligible based on the assets that are invested in those strategies. So with that background information, Britt, if we want to move along to the first page of the administrative fee section.
You could just, there was that $50 fee for distribution, right?
Yeah,
Yes.
we'll go over it in a sec, Frank, so you can.
Okay, because the thing is, the reason why all the, aside from the defined contribution, there are the people who have their other funds, right? The 429s and 457s blast off or whatever. So I'm just saying that those people might be taking money out more quickly, right? So if that's okay, if you're gonna go over it later, that'd be excellent. Thank you.
Sure. Yeah, we'll be sure to touch on that. But I think it should be page 4 potentially, Britt. Yeah, this one here. So here we benchmarked the $84 per account fee that Empower charges for the DC plans. And in the right-hand table, we have some statistics from the comparator or sample group that we used to benchmark your plans. So you'll see that in terms of the participant or account size, it was pretty close to the 1,000 accounts that are in the 457B and 401A plans in total. A little bit larger in terms of assets, but I think what that'll show is that typically larger plans are charged a little bit less. And so it's good, I think, to do this kind of comparison as opposed to the other way around. But in the left-hand table, we have the quoted fee distribution for the 20 plans that were included in the sample group. And what you'll see is that the $84 per account fee is pretty competitive. It falls below median, in between median and 25th percentile. And generally in these analyses, we just like to make sure that you are at least below median. So I think at least from this quoted perspective, that fee does look to be pretty competitive against our database. Any questions here?
Sorry, the sample size here is similar sized plans, correct?
Yep, we had 20 within the sample. And we looked at plans that had a participant count from about 700 to 2,000. And the average was 1,170 here.
Oh, it wasn't based on the number, the assets in the funds.
It was based on assets as well. But some of the plans tended to be a little bit larger in terms of the asset base. And so that pulled up the average asset figure that you see here, which is about 325 million.
Yep. Okay.
And Jim, in general, as Patrick mentioned, there's definitely a scale factor when it comes to DC plans and administrative fees. So
right.
When comparing Norwalk, which is a much smaller total asset number, to a bigger average plan, it's even more encouraging to see that fees are below median.
Right, agree. Yeah, and some of the asset difference is probably related to when the plans were started, right?
Yep, exactly.
Yep. Okay, thanks.
Sure thing. And then if we want to move ahead to page 6, the following page, we also took a look at the transaction fees that Empower charges. So currently, Empower's transaction fees are outlined in the bottom row of this table. They don't charge fees for loan setup or loan maintenance. I think you'll see that a lot of other record keepers do actually charge fees for these. All the plans in the sample group did have a fee for loan setup, and roughly 3/4 had a fee for loan maintenance. So it's nice to see that Empower is not currently charging fees for those. But for those transactions that Empower does charge fees for, which are the withdrawals and distributions, each of those being $50 per head, they did come in a little bit above median for in-service withdrawals, which was 25, and required minimum distributions, which was 38. However, the hardship withdrawal fee was a little bit below median, 85 compared to 50.
Are there that many people that are taking loans? I mean, only because you break this down, but are really many people taking loans on like a 401A or retirement accounts? I mean, it just seems like it doesn't mean much. The fact they have no charge, but how many people have fee? How many people are taking loans on this stuff? I mean, what I'm saying is that if they're cheaper in one segment, however, that segment of is near zero, what's the difference? I mean,
It'd be more meaningful to have a weighted average of all these based on the number of transactions, right?
Yeah, and
Right.
we're gonna have Empower present at the next meeting, next DC meeting, so we can specifically ask them to discuss these fees as well as what participants are doing, in particular loans, which we often try to get plans away from even offering loans, given the tax consequences if they don't pay the loans back. It's often just, this is your retirement savings, and it's really just not encouraging good savings. So we'll have Empower come in and really try to address all of these transaction fees and what participants are doing across all of them.
So if one of our employees retired and was doing the required minimums, it's $50, and they did monthly withdrawals, it's $600 a year. 50 times
Patrick,
12.
is it each transaction that's $50 if they're just taking their normal distribution in retirement?
Yes, these are per transaction.
Yeah,
yeah, you're right. That is kind
that would
of,
start that up. Yeah.
yeah.
All of these are kind of one-offs with that one exception. That's the one that I think most people would do, probably ought to set it up for a monthly basis.
Yeah, it's certainly possible, and certainly a negotiating point for Empower
Yep.
to see if we can get them to come down.
Yeah.
What is our contract with Empower extend to? Do you know?
Would have to double check. I assume that it was at least a 5-year contract, if not evergreen, but we can follow
Yeah,
up. on that.
I'm quite sure it was 5 years. I didn't know. So it would probably run to 2025, 24.
Yeah. And there's
Yep.
there's a lot of effort to switch.
Yeah, no, I'm not suggesting we switch. I'm just curious.
Yeah.
It's easier to negotiate fees when you're talking about whether we keep you or not.
Yep. Okay.
Okay, so that kind of covers our administrative portion. So if there aren't any other questions or comments, I think we can move along to the investments.
Perfect.
So that'll start here on page 9, where as the first step of our process, we looked at each individual fund investment fee and compared that against the median fee of a relevant peer group. So if you look at the fee labeled total fee, or excuse me, the column labeled total fee, that has the fee for each option. And then the rightmost column of this table, the peer group median fee, has each fund's relevant peer group median fee. And so we select peer groups for each investment option based on a few criteria. First being vehicle, so that mutual funds are compared to other mutual funds and collective trusts compared to collective trusts. The second is management style, so that passively managed options are compared to pricing for other passive funds. And then on the other hand, actively managed funds being compared to other active funds. And lastly, we align investing style or strategy so that a large cap value fund is being compared to large cap value funds, stable value to stable value, and so on and so forth. And so in this table, any investment option that had a fee above its peer group median is shown in blue. So I think you don't see a lot of blue here, which is a good sign. There are only 2 options that were above median. Those were the BlackRock Russell 2500 index and the BlackRock MSCI ACWI US index. But I think it's important to point out that both fees were barely above median. 7 versus 5 and 10 versus 9. So within the overall distribution of fees, they certainly weren't outliers. And then the second thing I would add is that as part of this exercise, we also reached out to BlackRock just to make sure that you're in the lowest cost share class or vehicle available. And they confirmed that based on assets, you are. So we have that piece of information in the back pocket as well.
And it's important to note that while it's barely above median, it's very reasonable. And you look at the amount of assets in both options, it's really minimal amount of assets. So in terms of being eligible for cheaper share classes, we're not quite there yet. But overall, I think it's good to know that all of the investment options are very competitively priced versus peers.
If we grow into a fee break in their structure, do we automatically get it?
Probably not. The asset managers tend not to volunteer fee discounts unless asked, which is one of the reasons we're doing this exercise.
Yeah.
And Patrick will highlight a couple opportunities that we have to reduce fees even further.
Okay.
Excellent.
Congratulations, you've moved into our lower fee class.
Yeah, yeah. The guy would get fired for saying that.
Certainly a bold business strategy. That's good.
Yeah.
But here, as Britt mentioned, we outline some of the lower cost alternatives that we identified through reaching out to the managers. So the good news is we did find 2. Those were for Invesco Stable Value and the TCW MetWest Total Return Bond Strategy. So starting first with the Stable Value Fund, you're currently in share class A1 of the collective trust, but based on assets, Invesco said you'd be eligible to move to share class B1, which has a total expense ratio of 31 compared to the current 36.
Good.
And then secondarily, for the MetWest Total Return Bond Strategy, you're currently in a mutual fund. But MetWest said that if you wanted, you could move to a collective trust that is cheaper. However, it's not a whole lot cheaper. It's a single basis point less than the current mutual fund, 35 versus 36. But just another thing to think about here.
And if you recall, we just changed vehicles in the TCW Core Plus Bond Fund and the pension plan from the mutual fund to the CIT for fee savings. So I just wanted to highlight that's a similar alternative vehicle here.
Does that require any action on the participants' part?
It shouldn't. It would require some paperwork most likely, but it is the exact same strategy and fund. So I can't imagine that there is much, but we can work with Empower to make sure that any notification that would be required if the board wanted to move forward would certainly be done and in a manner that's appropriate and based on, you know, industry regulations and best practices.
In changing the, I mean, for 1 basis point, you know me, I'm always for lowest fees, but is it going to be a complication for people to, you know, like you said, if there's going to be paperwork involved, et cetera, we don't know how many people have funds in this. Is it going to be really like?
No, it should
I mean,
be
I can s-
paperwork for the city, not for the participants.
Not for the participants, okay.
Yeah, but we can double check and reach out to them and really understand what is required. I think the Invesco share class change will be extremely simple and is certainly worth doing, and we definitely recommend doing that. TCW we'd recommend too, but we can double check on what requirements there are in terms of paperwork and in terms of notification of
Right.
participants.
Looks like
There's
the
no,
net, looks
there's
like the
no,
net savings would be $120 a year.
yeah,
but-
but yeah, right. The other thing is though, there's no tax consequences or anything like that to shift from one fund to another.
Correct.
So do we need a motion to change?
We would prefer it if that's okay.
Yeah,
So
I'll
since
move that we request to lower fees for both.
is there a second, Jim?
I'll second that, yeah.
All in favor?
Aye.
Opposed? No.
It's not
Pass.
worth much now, but presumably this will grow and eventually it'll be worth something.
Yep. No, I agree.
Agreed. Any additional questions for Patrick on the fee analysis?
No, good job. Good job, Patrick.
Thank you.
Very
Thank
good.
you, Patrick. Thanks for joining so late. We appreciate it.
Yep. Thank you, Patrick. Do you want Britt to go performance review? That's
I
on the
will-
agenda.
I will run through it quickly. On
That's
page
even perfect.
on page 9, we do show the 401A assets separated from the 457. You can see about 10.4 million in total assets, down slightly given the market environment. I would note that this is a Q2 report given the timing of the meeting. We show the asset allocation and where participant contributions are going on page 12 of the PDF. As you know, the target date funds are really the default here and make up 89% of the current assets and about 90% of new assets going in. So we think that is a favorable outcome for participants who get a diversified portfolio in their retirement savings. Page 14 shows the 457 plan assets up about 42.5 million, down slightly given the volatility. And if we turn ahead a few pages to page 17, we show the asset allocation and contributions, about 68% in the target date funds, followed by active equity options, passive index options, and stable value. And you can see pretty broadly dispersed in terms of new contributions, given how much older this plan is and how much more active the participants are. Performance is on page 19 for the target date funds. You'll see long-term, the performance continues to be very good. I would note that the near-term vintages perform very well in the down market, while the latter vintages underperformed to a degree. A lot of that is really the implementation of the glide path. The longer dated, the 2050, 2055, and 2060 funds tend to emphasize growth equity, whereas the near-term vintages tend to emphasize dividend income, relative value, equity, which obviously has done a lot better in this year-to-date environment. But overall, target date funds continue to perform well and in line with expectations. And then we show the passive and active individual options on page 20. All of the passive options continue to track their indices and benchmarks with minimal tracking error. And I would like to highlight the active equity options have all done extremely well in a down market, really across the board from large cap to small cap and international. These managers have protected in a very volatile market, which is good to see. And then your fixed income manager TCW, obviously a difficult time in a risk off market environment, but long-term continues to be good. And Invesco has done very well. Any questions on performance?
No.
Nope.
Good.
If not, I want to thank you. And I also want to thank the gentleman who figured out how we could go into executive session. I appreciate that very much because that was important, because a lot of the information would have been possibly a conflict for others to hear. And with that, is there a motion for adjournment?
I will motion to adjourn.
Second.
Charlie will second. All in favor?
Aye.
And thank you, Ellen, for staying. And
Thanks,
we'll see
everyone.
everybody.
Have a
Thank
nice
you.
night.
Yep.
Have a
Night,
good night.
everybody.
And don't tell Joe that